in the garden?
Rennie.
Yeah, yes, Rennie, yes. He had a very good point also, which I picked, about helping people or our relatives. Once they know that you are in Europe, you are working, your siblings, they make like maybe a lake, because they know that you are getting everything.
Cash cow, mama.
Cash
cow, something like that.
Yes, they don't know whether you're working day and night without sleeping. They know that you are coming out, then you find a bag of money. So also I noticed that the point when you said, if you tell the person that what do you think can help you to make money. So instead of giving that person money, he can find a way of making money, so that maybe after you give the capital and that person will progress, will work hard, you encourage that person cannot come back to you. But if I allow every day to give money, then I may end up like a slave, because I know that, okay, this is the date now, is coming to ask money. And again, there is another good point. So that was good point. I learned something to help someone to start something which he can create his own money and stop asking from you. And also he believes that he can make it. If myself, I can do it, he can also do it. And it will be a good way of showing him how to get money than being a source of giving money. So that's the point also I picked. And also another point from Charles I picked, it was very nice point. I think I'll remember later. He mentioned something very good. Anyway, I didn't write. Anyway, later on when I remember, I'll just share that point, which has helped me. So thank you so much, guys.
Thank you so much, Mama. Thank you, everybody. Yeah, I'll invite one more point, and then we'll carry on with the next element of our conversation here today. So, by the way, I'm back. My laptop is back online.
Can I just say one thing before we progress? Yeah, it's just to do with just to what Monica has been saying. I mean, Monica, Charles mentioned earlier on something about budgeting, and he mentioned something about intent, with the intention. Now, even with as much as, and I agree with Steve advice, it's very, very good. But then either way, these debts have there's a bit of, I'm an expert train like. But I think when you create a budget, you will realize where the holes are, where you're spending more money, than you should. At some point, you have to sacrifice in terms of, do I have to change my lifestyle? Do I have to cut down? If I'm driving a big car, can I sell the car, offset the loans here and there, drive a small car, and then start building from that? Because at the end of the day, and this is why I like these sessions, is because we're trying to learn, how do we come out from the so-called hand to mouth and get us to a place where we can be able to save money, to have good budget, save money, and let that money let that money work for us. So a good way for me, even whilst considering what Steve just said, is there's also other considerations, like just cutting down. If you live like in a 2-bedroom house, why I could go to a 1-bedroom house for a little whilst I'm trying to catch up with my budget, with my expenses. Because today, if you went and got 5 jobs, your expenses will go up. It doesn't. There's a law. I've forgotten the name. I think Charles mentioned it last time when we were having this conversation. The more you earn, the more you want to spend. If you are shopping at Lidl and you start making money, you be like me, you start running to waitress. So it does happen. So the best thing is just cut down. Yeah.
Was Parkinson's law.
Parkinson's law. Yes. Thank you, Greg.
Yeah.
It's very true. Parkinson's law, man, is a big problem. It's that devil in disguise. We live with it all the time. You have a bit of money that I tell you what, when it comes to the area of giving, usually it's almost like you would think the people back home know exactly when you get your paycheck. Because usually the moment that you get your money, the moment money gets into the bank, that's when the phone calls and the messages and everything starts coming in. But that's not the case. It's not that they know. It's just the fact that all of a sudden, now that you have the money, you take it all upon your shoulders because now you're looking, the Parkinson's law kicks in and you're looking for ways to spend it. That's why I say it's an area of mindset. We need to learn to have money in the bank and not worry about it.
Yeah.
I mean, that sounds silly. It sounds silly, but at the very bottom of it, that's where it starts. You need to be able to have £1,000, £2,000, £5,000, 10,000, 100,000 in your bank, and it's like, yeah, it's there, fine. Yeah, and not having to have sleepless nights thinking, what am I going to do with it? Because unfortunately, with this spending mentality, we are caught up in that sense of like, if you have money, you have to spend it. So it's like, what am I going to do? What am I going to do? So you would see every need, you would see every emergency, you would see every handbag, you would see every good car out there, you'd see everything. And that's what Parkinson's law does. And the spending also goes up with it. But point that you've said, Rennie, ties up really nicely with what we're going to talk about next, which is debt management. You talked about cutting down your spending, sometimes even downsizing. You know, you may need to, you talked about selling your car, going to a smaller house, doing this or the other. When it comes to the area, especially in a country like this one, where hire purchase and credit is like the order of the day, it can be a big problem. And therefore, talking about finances, we won't really be doing it justice if we want to spend a bit of time talking about debt and debt management, okay? So I hope we're going to have a really rich discussion when we talk about this, but allow me to share with you, it's just a single slide. I'm just going to talk through a few points, and then I'll leave it to the floor for us to have a bit of a discussion on that as well. And if you still have something to say about budgeting, we can bring it on at that time as well. We don't want to limit ourselves in our conversation, but allow me to talk about this a little bit first, and then we'll get to that. Fair? Right, can you all see that?
Yeah.
Give me a thumbs up. All right, brilliant. Now, debt management. Okay. Now, I dive right in. And I think I made this point when we were talking about spending. I said, avoid any unnecessary debt. And what do I mean by unnecessary debt? I do not mean a debt without a cause, because sometimes someone might think every debt is necessary. You're in debt because it was necessary for you to do. That's not what I'm saying. The point I'm making here is so many times we find ourselves getting into debt for things that really we could have postponed. Okay, but the reason we entered into debt is because we couldn't restrain ourselves. We couldn't have the self-control, couldn't have what we talked about before, delayed gratification. We couldn't say, right, I'm going to wait. You want something now. It's the quick fix thing. You want the instant coffee thing. You want something now. And as a result, you don't want to wait till the end of the month when you get your money. You don't want to wait till the end of the third month when your budget will allow you to get that thing, and so on and so on. So we end up into debt because we want things now. We don't want to wait. So when I say avoid unnecessary, I mean those things that surely you should have waited. Okay. I want a car. The car I want costs £10,000. Okay. But at the moment, I have a car that I can still use for another year or two. But because I really want that car, I go and borrow money through car finance to get that car on credit. Now, yeah, I might have that car now, but then I end up in a worse financial situation. Now I'm speaking in financial terms, in worse financial situation, simply because I couldn't wait a year or two to save up and allow my budget to allow me to buy that car outright, or at least to pay half of it outright or something like that, and reduce my debt burden, if you like. So sometimes we get ourselves entangled with debt just because we couldn't wait, and that's the order of the developing world and the world that is run on credit economy and hire purchase. So as a rule of thumb, avoid any unnecessary debts. But I have to point out there are debts that are unavoidable. And I think I mentioned this when we were talking about spending as well. I said things like mortgage. It's unrealistic to say that you are better off to wait until you save enough to buy your house outright and say, you know, I'm going to save for the next 20 years or 30 years. I don't know how long it will take, probably 40 years to save up to get the £300,000 to buy your house. Or whatever amount it takes for you to buy your dream house. I don't know. It's unrealistic because then you live in your house when you're soon to die. You know, when you're 80 years or 90 or whatever. So it's unrealistic. So there are situations where a debt may be the only way to get what you want. So I totally get that. But as a rule of thumb, and in most cases, especially when we talk about consumer debts, things to do with credit card debt, personal loan debts, and those kind of things, more often than not, they are things that could have waited. It could be someone you want to help back home. Someone comes to you with a pressing need. I want this now. It's really important. Now, rather than you getting yourself into credit card debt or this, that, and the other, why not tell that person, like, look, wait, I'll get some money at the end of the month. When I get it, I'll be able to give you this amount of money, you know, and make them wait. Because if you can wait, they can wait. You understand what I'm saying? And that's the discipline you need to create. Because sometimes you may find yourself carrying so much burden for other people that you wouldn't even carry for yourself. You make yourself wait for the things you want, but you can't make them wait for the things they want from you. That is absolutely absurd. So you need to have that discipline and say, like, I'm not going to get myself into unnecessary debt. If someone needs my help, I have to go to my budget. If I can help this person next month, then that's what I'm going to tell this person. I will help you next month with this amount. Can you wait? Please do. If you can't, then look for that help elsewhere. And once you create that discipline, then it will help you. I understand it's a mindset thing. It's an emotional thing, and you have to really learn to overcome that. I get it. It's not easy. But then when it comes to avoiding unnecessary debt, then you need to create that backbone of really telling yourself, no, I have to wait, and be able to tell others the same as well. Okay. Now, I want to talk a little bit about the difference between consumer debt and commercial debt, because this is where people sometimes get themselves into trouble. I've heard many people say things like this, that, don't be afraid of debt. Debt is a common thing. You know, the richest people in the world are the most indebted people in the world. Or the richest country in the world is the most indebted country in the world. Debt is not bad. Debt is good. You know, debt is okay. And they're using that to justify their consumer debts. Okay. Now, let me point a very clear distinction here. A consumer debt is what you're borrowing to consume. So basically, you're not going to make any money out of what you're borrowing. You're borrowing to use. Okay, you're borrowing to buy a car. You're borrowing to pay for your rent. You're borrowing to buy yourself some shoes. You're borrowing to give someone. You're borrowing. Consumer, you're just consuming what you borrow. Okay? Those are called consumer debts. They're very different to commercial debts or business debts. Now, business debts are what I call leveraging. And I think I spent some time talking about leveraging when we were talking about investments, I think, probably. And I said, sorry, there's a bit of like that, let me close that. And I said, leveraging is where you're using someone else's resources to make yourself money. And those resources can be money, it can be people's time, it can be people's skills, it can be people's energy, anything, you know, expertise. So you're using someone else's resources to gain a profit. Okay. So if I'm starting a business and I'm working on my own, I'm basically self-employed because I'm using my own resources, my time, skill, energy to make the money. When I start employing others to work for me, I'm leveraging, okay? Because now, not only that do I use my time and skills, I'm also using their time and skills and other resources possibly to make me money. Obviously, I'll pay them, but part of what they're making comes to me. That's leveraging. When it comes to money, the same thing can happen. When I go to a bank, say I've got a business, I've created a system that makes me money, okay? But then I don't have enough resources to max out my system, okay? And maybe I have more customers than my resources to supply to them. Therefore, I go to the bank and say, look, I have my business. That's how you go to, with your business proposal. Basically, what you're telling the bank is that, look, I've got this system that can make money for both you and me, but I haven't got enough resources to max it out. So I want you to give me money. And based on this, you can see that if you add more money to what I already have, I can make so much money to be able to pay you back and then some, okay? That's what commercial debt is, because basically you're borrowing so that that money can add value to your money-making business that is already there, okay? And as a result, that money that you borrowed can pay back to your lender and get you some profit. So you end up with more than what you had before you borrowed. Does that make sense? So that's what commercial debt, essentially what it is. While consumer debt, basically you borrow and it goes down a black hole, never to be seen again, but you're just left with a debt. That's the difference. Now, when we say that rich people have so much debt, it is very true. I mean, you go to you look at their accounts, look at their numbers, look at their tax returns, you would see a liability column filled with debts. You know, they've borrowed from Barclays, they've borrowed from Standard Chartered, they've borrowed from all banks, they've got debts everywhere, okay? And that's just modus operandi. Why? Because that's how they make their money. What they're doing is just leveraging. They are borrowing, but they end up making more out of what they borrowed to pay back and then some, okay? That is commercial debt. So you can't compare your consumer debts to that and say like, I'm better off with the debt because rich people have so much debt. Or you look at countries and say, oh, countries have so much debt and therefore, you know, debts are good, because it's not the case. It's the same with countries. You know, you have these big countries, rich countries, okay? The reason they take credits, whether it's from IMF or World Bank or from other countries, because countries can borrow from each other. And they have their own ratings, AAA, AA, whatever. So basically what they do is this same concept. They have resources and they know they haven't maxed out their resources in terms of production, in terms of industry, in terms of supply, in terms of service. And what they realize is that they're sitting on these resources and they haven't got they're sitting on these systems and they haven't got resources to max them out. So they borrow in order to be able to increase their output, if you like, their GDP, if you like. And they've done their numbers to know that if we borrow from World Bank or from IMF or from anybody else and be able to increase our GDP or our output in general, we'll be able to pay back and then some. So again, it's like a commercial debt of some sort. So they may have these huge, humongous debts, but it's not consumer debt, okay? It's not something like you getting it to just use it and then it's done, okay? So this myth that debt is good because rich people have debt is something that we really need to steer clear from. If you're thinking of getting a business loan, a business debt, then you really need a proper business plan. You really need to have a system, either that is already working or that you can prove that it will work, and then you can borrow against it. That would be leveraging. That's a different matter altogether. When we start talking about business, we'll talk about business loans. That would be a different topic. We'll probably spend more time when that comes. But when it comes to consumer debts, we need to see it and call it for what it is. It's just throwing money down a black hole. Now, saying that does not mean that what you use the money for is not a good thing. It can be something very noble. Like you said, it can be charity, it can be you giving, it can be you looking after your family. It can be something really good. It's not just you throwing money at splashing things that are perishable. No, it can be really something good. But still, the truth of the matter is, as long as it's consumer debt, it's money down the black hole because you're not going to get it back. And that's something that we need to understand, okay? Right, now, the next thing is I want to kind of have a quick chat with you guys, is that when we talk of debts, it's important that we have to deal with debt before we start considering saving or investing. It's very easy to think like, there are these really good opportunities to invest. Oh, Charles was talking about investing in stocks and shares. Oh, there is this good business to do, you know, I can make money here, you know, if I can put money there, I can do this. Oh, there is this really good savings account, I can start putting money away and then I'll get returns. Oh, there is this, oh, there is, you know, I can put money there and then get money back. But if you have debts, especially consumer debts, the most notorious of which are things like credit card debts, personal loan debts, and those kind of things, due to their high interest rates, due to their high APRs, what tends to happen is that you end up losing more from your debt from what you could potentially make from your investments. And therefore, your plan to save or invest becomes almost like a fallacy, almost like a myth, almost like an illusion. You think you're actually doing something good for your future, but it's not. Let me give you an example, okay? Typical credit card debts would have an interest rate of between 15% and 40% APR, okay? Personal debts could range from 10% to the sky's the limit. It could be even 1,000%, I don't know, okay? But most investments, for instance, if you're investing in stocks and shares, realistically, you would expect returns of around 8 to 15% per annum. Okay. Now, if you have a credit card debt of 35% APR, and you've got an investment portfolio bringing you an AER, which is an equivalent, to the APR of 10%, then you are still losing because what your investments are bringing in is less than what your debts are taking out. You understand? So it makes more sense for you to sort out your debt issues first before you start thinking about investing. Go to any financial advisor, and the first thing they will try and nip in the bud as far as your finances are concerned is your debts. They need to bring that under control first. I understand. There are things like mortgages, which is a completely different kind of debt. And usually their APRs are much lower because it's a much longer term debt. Most mortgages, you're looking at something between 3% and maybe 8%, okay? If you're getting a really bad deal. And in which case, it's usually less than investments that you might get 10% up to 50% even. So having a mortgage while you still have your investments makes financial sense because you're still making more out of your investments than what you're paying in interest to your mortgage. So that's absolutely fine. But with most personal debts and personal loans, you're better off dealing with the debt first, try and get those controlled, try and get those sorted, clear those out first before you can start thinking of investing and even saving. Because if you're putting money away while your debt is accumulating, literally you're setting yourself up for failure because most of your money is going to end up paying that and the interest, and probably you'll still not clear it. Why? Because you were just putting money away with probably zero interest while your debt is accumulating at such and such interest. So these are the things you really need to be thinking about when you talk about debt management. Okay? Ignoring debt is always worse than dealing with it. Now, this is something that we all do, don't we? So the emotions of it, you don't want to deal with it, you don't want to deal with the bank, you don't want to deal with the phone calls, you've got this debt, credit card debt, you get these letters every day. So what do you decide to do? You decide to filter out the noise, okay? You don't pick up the phone, you don't answer you don't deal with it, basically. Now, that basically is you just ducking your head under the sand. That problem is not going to go away. It's just going to get worse. So usually you're postponing it for now, dealing with your debt issues, thinking that maybe it will go away. But actually what you're doing, you're making it worse for tomorrow. And you end up, it will just get worse and worse and worse and worse. And so the rule of thumb is, if you have a debt issue, deal with it now. Because however bad it is now, if you don't deal with it, it's going to get worse tomorrow. So dealing with it now is always going to be the best policy, however bad it is. So ignoring that is always worse than dealing with it. So always deal with it head on when you have it, because if you want to free yourself financially in the future, if you're aspiring to financial freedom and independence, then you have to deal with it now. Otherwise, it will come and bite you in the future. Seek professional advice. Like I said before, most financial advisors will always point you first to debt management. When you seek help, and that is the area they will probably focus most of the time on dealing with that, because once you've dealt with it, then starting climbing up the ladder of financial success things about investing, saving, it becomes much easier because then you don't have this lingering thing that is holding you back and pulling you back all the time. So seeking professional advice is really important. And yeah, because sometimes you may be having issues and struggling yourself, and you think, oh, the world is crushing on me, there is nothing I can do. But there may be a solution out there. Okay. Like Steve said something here really important, and he pointed out something that if you're struggling with something, you're struggling paying rent, or you have a situation, something like that, sometimes, opening up to it and say, like, look, facing that and saying, like, look, this is my situation. Maybe you might be speaking that to a financial advisor, maybe you're speaking that to even your creditor, and you say, look, this is my situation, this is my plan, this is what I intend to do. You'll be advised on what to do. Probably most good lenders will point you in the direction of financial advisors to advise you on how to go about sorting that debt out. Because once you do that, you're taking responsibility. The key thing here is taking control. You need to be in control. Whether the situation is dire, it's bad, it's horrible, you have to take control of it. They say, it's my responsibility, I'm going to deal with it however bad it is. And once you take that responsibility, you're already on the road to recovery, even though it may not be seen that way at that time, but you have to start dealing with it. So seeking professional help can be a very good piece of advice. Okay, right. Let me stop there and allow for a bit of discussion. Your thoughts, guys? Very quiet. Are people still pondering, or?
We are framing.
Yeah. We are
Hi,
taking
Charles.
it in. Taking it in.
Hi. Oh, okay, Auntie Grace, continue.
Oh, I said I'm taking it all in.
Oh,
I'm digesting it. I'm absorbing it.
mhm.
Very good.
Yeah. Yeah, that's really, really wonderful. Yeah, I was listening from the time we are talking about budgeting, and coming to the aspect of also debt management. And I think many of us, sometimes when we have debts, we don't budget for paying that debt. We kind of put it like as if it's something very different. And I will just give a little example of how I did myself, because there was a time I wanted to do something and I didn't have money. So I took, it was not consumer. It was for something that I needed to do at that time. And but you see, a debt is a debt, it will still hang there. And I met somebody, we were just chatting with someone in church, and they just said, okay, when are you planning to finish the debt? And then I said like this, maybe like in 2 years' time. And they said, I will try to finish it within a year. And I thought, oh, that's really not possible. They say, well, just go and look through your bank statement. And that's where the aspect of budgeting comes in. And I took that assignment. I went and I established a spreadsheet. I didn't go to Google, the professional ones. I just did a layman one. Put all the things and I started realizing, oh, actually, some of these things which money is coming out of my account, even if I don't spend money on that, it's not that anyone will die or my health or my entire well-being will go down. I actually realize I am doing it because I just want it and not because I need it. Do you know, I started kind of putting lines on those things, because, I sat down, where you are defining budget, where you have the intention. So I really had to be very, very intentional, crossed out each and everything that I didn't think, if I don't have this, not because they were not good, but at this moment, they're not a priority, as Mr. Tombe was saying. And do you know what? That amount was almost equivalent to the amount which I was repaying the loan. And therefore, I realized, oh, within myself, I actually found some money. And that couple, before I finished paying the loan, they called me for another time and they say, now, by the time you finish repaying that loan, so for example, I'll give an example. If it was like 300 pounds a month, now I was paying 600 less the time. He said, by the time you finish, you will be having 600 pounds extra. Please do not go now and start saying, now I need to top up my, the Parkinson principle, because they say that is exactly what we knew was going to happen. But this is what I was also listening to Mama Monica when she was saying, oh, sometimes we have people and they're depending on us. Actually, I came to realize they cling on us because we have told them that anytime you need, there is abundance of supply from me. I reached a point I had, because I was actually trying now to focus on budgeting, I had to reach a point and tell some people, guys, really, if I tell you that I do not have money, I seriously don't have. And when I have, I have. And no one has died since I've stopped, helping, because it was like, oh, because you're just by yourself, so they think that you just go Buckingham Palace, pluck some money and you have a lot of money. So requests were coming. I tell you, since I said that, my family loves me so much. They love me so much, but they're still well. No one has died because June has not supported them. And for the first time, I started realizing that, okay, I'm actually also being paid. Part of my budget, I pay myself. And when I pay myself, it is something that I will do something for myself, which is part of the bigger plan which I have for myself. Where do I want to go? And I think sometimes budgeting, we fail budgeting because we do not know what we want to achieve. So for example, if you say you want to buy a house in 2 years' time, you know the kind of house you want, so you kind of say, this is the amount of deposit which will be required. You start looking where you are going to get that deposit, because if you don't, you know what we will do? I will come, Charles, please borrow me 10,000, because, and then I am getting 10,000 from Charles, and then I go to Stephen, I get another 15, I go to somebody, I get 20. What have I done? I have accumulated another debt, and now I will be paying a mortgage, but I have to still repay these people. But if I have that discipline and say, okay, I want to buy a house, probably I'll buy it in 2 years' time. Let me now start working. That 600 pounds, which I had saved from paying debts, now it goes straight into my deposit, savings, and maintain a discipline not to go and do that. So it is all these things. It starts with you actually knowing what do you want to achieve, where do you want to go, because if you have something that you are working towards, it will help with the budgeting. Also, to discipline myself, I tell people, they laugh at me, but I say it's working for me. I literally went and bought a petty cash tin. For my monthly expenses, I do not use my card. So if I have budgeted food for the month is 100 pounds, for example, I withdraw that 100 pounds and it is for food and it will be there. So if I will go there and see chocolate tomorrow, KFC, okay, June, go and do that. But do you know by the 15th of them, you will be having 10 pounds. That is the one which will last you. I do not want to go and use my card. That is the discipline I've established for myself. Why? Because I want to be intentional with the budget which I have set for myself. Sometimes it's painful. You might not go to places where your friends are going, because you do not know their journey. You do not know where they're going. And I think sometimes all those kind of things help deter us from maintaining the budget. So that aspect of discipline, maybe Charles, you can speak again about what it entails, what discipline is in terms of budgeting. What are the things that you'll have to go through to kind of be disciplined in maintaining, because it will cost you.
Wow. That is amazing, Sister June. That is really, really amazing. You've said a lot of things, and I was hearing a lot of key words there. You were talking of planning there. You were talking of of discipline there. You were talking of intention. It's like what we said at the very beginning. What we're sharing here, these are like tools. Okay, it's not an all or nothing business here. You know, there are things that may be more applicable in your circumstances and things that you may use more for you to help you through other people's experiences and ideas. And I encourage you to really take something with you, something that can really help you with your financial journey. Because the things we're discussing here are really, really, really important. Thank you so much, Sister Jean, for that wonderful sharing. We've really run out of time. I was really hoping I would talk about insurances as well today, but we're not going to have a really long discussion on that at all. I'll just make it a mention that insurance is also important when it comes to financial management. Now, usually when we talk of insurance, people think of car insurance, you know, and those are statutory insurances, things that you must do. You can't drive a car without insurance and things like that. Those are really important. And we can draw a lot of lessons from them to kind of inform us that we do need insurance for other things. Life insurance, for instance. I've seen a lot of people ending up in families, ending up in turmoil because they didn't have life insurance, or because the parents didn't have life insurance. So you have a young family aspiring to do great things. The parents are really trying to do really good things. They're running their business, they're doing this, that, and the other. But because in their absence, everything just collapses, everything just goes down. And there is nothing in place to help those that have remained to really, you know, pick up the pieces and carry on with life. Especially in a country like here in the UK, there are so many options when it comes to life insurance. I was challenging a friend of mine. I said, look, it's not just life insurance, you know, even things like bereavement covers and things like that. And the person is thinking, are you mad? Why are you talking about bereavement cover? You're only 40. But the point I'm trying to make here is that when I'm talking about taking control of your life, you need to think not just you now, but you have to think when something happens that is outside your control. How is that going to affect your finances? How is that going to affect the finances of your family? How is that going to affect the finances of your children? And that's where insurance is coming. It's the same with car insurance. The reason you're taking that insurance is because you think you're in control all the time, but sometimes an accident may happen. It could be a fault, it could not be a fault. You may not be in control of that, okay? And as a result, what's going to happen then? You know, you end up crashing into a Lamborghini with 300,000 pounds. You know, what are you going to do? You know, so that's what insurance is there for. So even when it comes to life, for instance, I want to talk specifically about life insurance. You know, that's what life insurance is there for. We try and stay clear of that conversation, unfortunately. A lot of us, and there is a bit of a taboo to talk about life insurance because it's almost like you're prophesying death, and therefore, why should I think about life insurance? Well, you know, why is that important? But it's very important because if you consider your family as your responsibility, then the question is, what's going to happen when you're not there? Whose responsibility is it going to be when you're not there? So what have you got in place to make sure everything is in order when that happens? You know, are they going to struggle? Are they going to struggle to bury you? Are they going to struggle to make ends meet after you're gone? If you were the breadwinner, if you were the one that was paying the mortgage, for instance, or paying the rent, if you're not there, what's going to happen? Are they going to have to downsize? You know, so those are the questions you need to ask yourself when you're talking of life insurance. And it's very important that you have answers for those, because if you don't, basically you're just ducking your head under the sand and you don't want to take responsibility. So I don't want to spend too much time talking about that at the moment, because that is a huge topic, very wide topic, and probably, God willing, someday we might have more time to talk about that. But you're more than welcome to say a word or two about insurance, because I think life insurance is something really important. And if you've never considered it before, I think you need to give it a really serious thought. Whatever age you are, whether you're 20 years, 30 years, 40 years, as long as you have responsibility for someone else, whether that be a spouse or a child, then you need to start thinking of life insurance. Having said that, I want to end there, but I would like to invite two contributions from the panel. If you want to say anything about budgeting or about debt management or about financial management and financial discipline in general, this is your time, because I think this might be the last session that we have on this series in particular. But yeah, so I would like to invite two contributors, and then we'll wind up. Who wants to go? If nobody, then we might call it a day. Grace, do you want to say something?
I just want to, praise the whole thing. It's very informative and educative. So, I'm wiser. Learned a lot. So
Thank you so
now
much, Grace.
I know how to, do all these things, and I'm very grateful. It's a wonderful program, and thank you for laying it on. Yes, God bless you.
Thank you so much, Grace. And please, let's all be great ambassadors of these conversations. I mean, the reason Lifetime Success Seminar exists is because we want to raise these conversations.
Yeah.
Stephen and I, we've been doing this for a few years. Stephen has been doing this longer than I have, actually. And the aim is that we just want to raise this conversation in our community. So today there are just 10 of us here. So I mean, what we need to do, we just need to make sure that we share this conversation with friends and family, and most of these are recorded. So when I share this with you, try and share it far and wide, so others may get something from it, because that's how we can develop and grow as a community.
Yeah. Thank you so
Any other
much.
contribution? If there is nobody else,
Just say one.
yes, Monica.
On sharing with others, because when I was inviting Junie, I didn't know she's going to give something which has given me a lesson to learn something from her. So you never know who can come with ideas which can rescue someone. So let us share as much as we can. Yeah, thank you.
Wow, thank you so much, Monica, and thank you, everybody. Thank you for your contributions. Thank you for bearing with me. We've gone way beyond time today, but it's because we had such a rich discussion, rich conversation, which I hope it's really helped you. It's really challenged me in a lot of ways, some of the conversations we've had here, and there are things that I will incorporate in my own financial journey as well. So guys, let's keep at it. Let's keep challenging at it, and really try and improve ourselves in this area of finance and financial independence. And yeah, thank you so much for being with us, and we'll end this here for today. And I'll send information about what's going to be coming up next time, hopefully 2 weeks from now. So watch this space. After that, let me say, have a lovely weekend, enjoy yourselves, and see you again soon.